You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. Wow. Welcome to Friday. You made it. You survived so far. We'll do our best to keep you from walking off the ledge during the show. Yes, it is Friday. It is noon Central. It is 1 p.m. Eastern. It is time for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com. And yeah, it's a wild one. So we're going to dispense with a lot of stuff at the top of the show here. If you want to join us in the pro, you know where to go, theoptionsinsider.com/pro. In fact, it's such a wild day, such a wild week. Not quite unprecedented because nothing is unprecedented anymore in these markets. We've all lived through myriad unprecedented things in the markets over the past 5 years. So we're not quite in unprecedented territory, but we are knocking on the doorstep of some, shall we say, epic, historic, disturbing, pick your adjective of choice. They probably all apply. Developments out there in the market. So as a tip of the cap to that and the fact that some folks I know are having great days, maybe some rough days out there right now, head on over to the live right now. You can get it. It's open to all right now, listeners. It's an emergency session of Volatility Views. So we'll put the link up there on all of our socials and everybody can dive in. You don't have to wait for the podcast today. I know it's a wild day out there, listeners. So we're doing our best to help out there. And joining us to help make sense of the madness, make sense of the chaos. First, we go out to the hinterlands of Chicago, where he has taken a break from corrupting young minds of the future to corrupt your mind right now. He is none other than Dr. VIX, a.k.a. Mr. Russell Rhoads, from the University of, I almost said Iowa. I don't know why I'm feeling Iowa today. University of Indiana. I'm drunk on vol, sir. Mr. Rhoads, welcome back to the show.
Statement about University of Iowa. If you're kind of drunk, then I understand the students have a really good time at that school. We'll just leave it at that. I'm not, and it's not disparaging. I wish I were having a good time when I'm at school, but as a teacher, it's my work. As far as this week goes, oh my gosh, we could spend hours on this. I'm so glad you opened it up to the world. I was going to suggest it, but it's not my program to suggest such things like that, and I know that I've been put in the penalty box for saying, hey, let's do something this way in front of everybody and creating work for you. So I'm glad you opened it up because I think it's a good opportunity and I'm not disparaging people listening, but the VIX tourists that only show up and pay attention when VIX is doing things like it is doing right now, it's a good opportunity for us to educate those folks. So I hope a lot of people are taking advantage of that.
Yeah, all you quote unquote VIX tourists, maybe these are the times when you just pay attention. I get it. You got other things going on, and all of a sudden vol is slapping you in the face. Those are the times when you have to sit up and pay attention. And joining us, these markets so crazy, he's sitting up and paying attention all the way from the coasts of Maine. He hasn't been on Vol Views in a while. He is the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. Rock Lobster, you know the news is loud, dare I say it, cacophonous, when it reaches all the way out to the shores of Maine, sir.
It would appear that way. I'm all the way out here in the shores of Maine, and it's actually sunny and spring-like right now. But I have to say, some varmints have got into my compost pile, so I've been picking them off with the 22.
There you go. In between talking vol, he's going to do some casual varmint murder, listeners. All right. So listen, if you hear a little pop in the background, you know the Rock Lobster is up to business. As it's time for us to get down to business, it is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Let's get down to business. Volatility Review. It is a week that has some vol to review out here, listeners. And man, it is a wild one. I know a lot of people were asking already on Monday. I wasn't sure if we were quite going to get there. Yesterday, obviously, we broke through those hallowed ranks, those hallowed levels. I wasn't sure if we would maintain it today or if something else would happen. But not only have we maintained it, listeners, we have blown well past the level. So I know a lot of you have been waiting for this moment, listeners. Let's see if I can get it working for us here on this new system here. But I think it is fair to say, listeners, that we are all collectively in the danger zone. All right, well, that gets loaded. I will start breaking down some of the, of course, Mr. Loggins, big star that he is, wants to be fashionably late as always. So let's see. He might pop in at any moment. You know, these big stars hanging out in the green room. And then they just come in when they want, listeners. But you know what? A wild market out there, a wild week. Where to begin? In a nutshell, the markets are super red, listeners. Okay, bam, that's it. We're done. Obviously, a lot going on out there right now, listeners. If you said to yourself at the start of this week, you know, I yearn for the good old days of 2020. Maybe not from a pandemic perspective. No one wants that anymore. But from a market perspective, I like those days where we were selling off, falling out of bed, markets on fire, people running around like Chicken Little out there in the markets, listeners. I yearn for those days again. Well, if that is you, listeners, then this is the happiest you've been in 5 years, because we are now back in that territory, listeners. The March/June/ pick your moment. A lot of it March, though, the bad time, since 2020, listeners. Just some data points. And by the way, as we're kicking off the show here, listeners, S&P off nearly 5%, 4.9%. The Dow off 4.33%. NASDAQ off just ticked 5.04%. So we're off 5% in the NASDAQ now. VIX cash, after we were talking about it yesterday on the option block, a lot of folks lamenting, you know, we got up to about a 27, 28. We briefly flirted with 29 for a few minutes before that kind of went the way of the dodo. A lot of people said, you know, that's not doing it for me. I bought these VIX 25s or 30s. I want these bad boys to pay off. Well, you're getting your payoff today, listeners, now that China has responded in kind. So now we are seeing just epic levels across the board. This, like I said, worst sell-off since pretty much March of 2020 in most of the major indices. We're seeing the S&P at this point today down about 12% year to date. If you go back to the highs, it's off over 16%, the highs of February this past year, obviously. So if you bought in February, someone wrote in recently saying they were down quite a bit, and I was like, oh my goodness. If they bought in February without doing anything else, then you could be down about 16%. The entire stock market, if you want to add up all the market cap out there, down about 10 trillion since Inauguration Day. And that's, of course, not that long ago. And half of that, 5 trillion coming just in the last session today. So it's been a rough one. If you like large numbers, everyone loves talking about the Dow on days like this because it has crazy point moves. A Dow off over 3,000 points just in the past two sessions, or pretty much a little over 24 hours out there. NASDAQ was threatening bear territory right as we came into the show, and I do believe we may have actually crossed over that now. I think it's off over 20%, I think, since its December high, but maybe 21. I'll have to go check. We're moving quite a bit out there right now. If you're also wondering, remember back on the August 5th meltdown day when everyone freaked out, the market fell out of bed, we had that carry trade, call it what you will, sell off on August 5th, and everyone freaked out and VIX popped a bit. We are now below that level in the S&P. I think we got down to somewhere around 5180 in that range. We are about 50 handles below that now, actually more than that, 5118 right now. So we are well below that level out there, in at least on the listed intraday time. You know, things got wild in the after hours. Just during the trading session we're talking about here. If you listen to the folks in the big houses like Morgan and others, you know, we take a dim view of analysts out here. They're saying the next line to cross, listeners, is 5,100 in the S&P. If we cross that, then it's lookout below, and we are a hair's breadth from breaking through that right now, listeners. A lot of you have been asking about circuit breakers. What's the deal with circuit breakers? When do they kick in? We're off over 5% in the S&P now, about 5.2%. It's a reasonable time to be asking that question. Over 5% in the S&P. We don't see that too often. So here's your levels. Are you fresher on circuit breakers, listeners? This is all keyed off the S&P, by the way. So level 1 circuit breaker, 7%. So we are not that close to that, but we are not that far away from that either. Less than 2% away from that. Once that happens, we are halted for 15 minutes out there, listeners. Next level, level 2. I mean, this is getting on apocalyptic at that point. Level 2, 13% drop. And then you get another 15-minute respite. And then level 3 is 20%. And then it's over. Then the day's done. But I mean, my goodness. Let's not talk 20% just yet, shall we, listeners? If you're wondering some other levels out there, Volley, our buddy Mr. Scott Nation's product out there, 33.5, up over 14, about 14.5 points from where we were this time last week. That's, of course, the straight at the money vol measure. So if VIX with all of its skew and everything, you don't want any of that. You want straight, just the facts, vol, ma'am, Volley north of 33 as well. And VVIX, the vol of vol itself, at a 138 when we commenced operations. That's up quite a bit. That's up a whopping 40 points. We were at a 98 on the show this time a week ago, listeners. So just absolutely wild times. I'm glad to see folks are getting in there to take advantage of, the open to all live. It's one of those days, listeners. We all need to get together and talk some vol. We're going to spend a lot of time here at the top of the show. The other stuff, the volume, we'll get to that. That's fine. But we want to make sure we tackle all the big issues of the day. Let's start with Mr. Dr. VIX, sir, because there's a lot popping off out there this week. I just broke down a lot of numbers. There are a lot more we could get to, sir. Obviously, you look at vol through a lot of lenses, including from the historical perspective. We are in nigh on a historic week right now, sir. What is catching your eye from a vol perspective out there?
Well, the thing that really caught my eye was VVIX, which and activity yesterday. I was all excited at 3:01 Chicago time to put pen to paper and start writing up all of these VIX trades that monetized, and lo and behold, I could only find a couple. And I think with VIX closing on the high yesterday, with VVIX closing on the high yesterday, and the S&P 500 closing on the low, that combined with anecdotally just not seeing a lot of people monetizing their long VIX positions was a pretty darn good indication that yesterday was the beginning of the move that we're experiencing right now, not just a one-day rebound type thing, which we've seen an awful lot of lately. It's that's some great Monday morning quarterbacking out of me, looking at the tape after the day was over with. But I mean, struggling to find trades where people are monetizing their long volatility positions when the S&P 500's down, 3-4% on the day. That's different than what we're used to seeing. And I do think it was a precursor for what we're seeing today as well. I can't really get a handle on the action today so far. It doesn't feel, again, with VVIX up around 130, that by itself is somewhat of an indicator that you're not seeing people exit their positions, their long positions, because lots of selling of the VIX calls is really what you generally see to push VVIX down. So that's probably the biggest thing that caught my eye, and something that I wish I had been paying closer attention yesterday, and maybe been able to take advantage of it more. I did leave my S&P short on after I saw all of that, but otherwise didn't do a whole lot.
Yeah, you got to be celebrating. You've been saying I'm short. I'm naked short this morning. We're well past where I put these positions on the downside, and I've been in my old age. I've learned to be a little bit more patient than I would have been than I might have been in the past. So yeah, things are going fairly well. We're not talking about the ETPs yet, but I still haven't filled out my short ETP position yet. I'm splitting it 50-50 between the new one and the old one, and I'm kind of glad I'm using the new one, because the new one tends to hold up better in situations like this than the old thing. If you're long that bad boy, I guess you're a little bit happier right now. Yeah. That one's,
and we'll talk about that when we get to the ETPs.
That's a weird ball right now, but you deserve a little bit of a victory lap. You've been taking a beating of being short this market for a little bit, so you deserve when you get it coming your way. I don't know if you had it coming your way all at once like this, but
I grew up in the South, where if you ever were boasting about anything, your mom would hit you with the wooden spoon. So I'm not really good at taking the victory lap.
Yeah, I learned, at least early on the trading floor, that the people who were the most ready to talk about and willing to talk about how much money they were making were the ones who weren't making any money at all. The ones who were making serious money, they ain't talking about it to you down there.
Well, with me, I'll tell you either side. you know that. So
that I do indeed. Oh, by the way, really quickly, yesterday when we were selling off in the first leg of this marathon sell-off, Mr. Rhoads, and everyone was lamenting VIX only around 27 or so in VIX cash, what were your thoughts on the immediate vol response versus what we saw today?
Oh, it felt very muted. It totally did. In fact, I'm in a chat group with some professional volatility traders, and they like to make fun of folks that try to get in front of the camera as much as possible on days like yesterday. And they were making fun of one of them, and they said, anybody want to take the other side of a bet that Mr. XYZ says that the VIX reaction was way too muted for what really should have been going on, and we all just kind of got a chuckle around that one. But yeah, I mean, I think that was the common belief among a lot of professionals, was that the VIX reaction just wasn't what you would expect out of a day like yesterday. And I think that some of that was. I think a lot of that was just a feeling that we're going to continue to move. The VIX is going to continue to move higher, and lo and behold, that's what happened. So next time that happens in 3 or 4 years, we got to remember that.
Yes, we have been saying for a while, you got to take your profits while you can, and certainly there was an opportunity to monetize some of those. And Russell said he didn't see a lot. I did see one yesterday that I will talk about, a trade we talked about recently. They did take off and monetize it. But also was a day to maybe keep some of that in your back pocket, because we didn't know what the response was. And that's what we were talking about in an option block yesterday as well. But just, it did seem muted at the time, and it was maybe an opportunity to keep some of that powder dry. And hopefully you did out there, listeners. All right, now we go to the land of the Rock Lobster. Mr. Rock Lobster, sir, just absolutely wild times out there, sir, across the board. Madness, dogs and cats living together, mass hysteria, sir. What is catching your eye out there?
Well, I think this is the first time that some of the dip buyer people, didn't work. It's not working as good. Or when they come in and they whack all the juice VIX in the 20s, or I guess there's all these funds that sell options. It didn't work this time. So we've had probably a few 5% days now, 2 5% days. And I think if you're an investor with stocks, I have the nibble routine where every week there's like 10 names I really want to own. If they get below a certain price, and I buy 20 shares of this and 30 shares of that and 100 shares of that and blah, blah, you know, and I'd start repatriating some money back into the stock market, just a little every week. And I try not to think a whole lot about it because your actual, you know, your retirement equity portfolios, people that, you know, you own stocks. Okay, nobody is up for the year unless you're Warren Buffett, by the way. I think he's the only one, but he usually does better than the average person. Even Berkshire Hathaway is down because Berkshire holds a lot of stock, you know. Probably not a bad opportunity actually to pick up some Berkshire shares down here. But I digress. So from a just like straight vol point of view, well, we should be a 42 VIX, right? We should be, because it's quite easy for the market now to move 3% a day easily, right? So I believe the way I read somebody's book and they said VIX is the at the money volatility on the imaginary 30-day forward SPX at the money strike. And if you look at how we're trading and you're moving 5% a day and VIX is 42, 3% a day is a 48 VIX. So, heck, I don't know if it's overpriced, but it's certainly it's certainly now I think at a good price. And I would just say last but not least is generally when the market gets like this, we're in the danger zone. Even though implied volatility is relatively high, it actually, I think the options are generally underpriced because you get such a, these swings intraday are so big, even when they're charging 45, 50 volatility at the money in SPY, heck, you could be down 20 points in a day. So I know it's a different game. It's a dangerous game. But you know, that's what markets do, right? They're pricing options. So I think the uncertainty is warranted, but you also have to look at, you know, the Mag 7 was pretty expensive. You know, Apple has almost no revenue growth, trading at a 30 PE, $4 trillion valuation. Microsoft, kind of similar, although Microsoft does have revenue growth. Google, Amazon, again, 30 PE. Tesla still very high PE, but you know they have a little different kind of growth routine. Nvidia, again, growing crazily, but you know, 10 times revenue or 20 times revenue, whatever it is. So it's like those stocks had some room to be capped, to be kneecapped. And that was what most of what drove the S&P 500 higher were those stocks. And there was a little bit of participation toward the end of the year and the beginning of this year. You know, this is as good a reason to take some of that off. So I don't know. I think there's lots of stocks that are starting to look interesting. But if the White House's goal was uncertainty and lower interest rates, they're getting what they want and maybe bringing more revenue in from tariffs. So they're getting what they want. It's just, will everybody else want it? Maybe. So we won't know today or tomorrow. But the V-shaped bounce is not quite here yet, from what I can see. So how does that change? You know, they start talking, have some kind of tariff powwow somewhere. Apparently Vietnam, you know, said, hey, okay, maybe we'll do something. And that led to basically, I don't know, like a 100-point rally in SPX, I think, at one point today. So maybe this weekend they get together and people sing the, they sing the happy song and volatility comes in a little bit, SPX rallies. But yeah, could it rally to 5,400 in about 3 seconds? Sure. So just be mindful of all the ways that this market could change out of 41 VIX. Like everything you see could all be totally different. by 4 o'clock today.
Yes, it can, sir. And you know what? Big time celebrity that he is. Mr. Loggins took his time getting out of the green room, but he has joined us now. It is indeed the day. I saw our chat was looking for the Loggins. They were actually suggesting it's a time maybe for even wilder songs than Danger Zone. Mr. Rhoads chiming in with Panic at the Disco. Interesting. That could be one. But Danger Zone, we're all in the Danger Zone. We got to go with that. And you know what? We did invite him. We did pay his fee for the day. You know, he had a lot of riders on his contract to come to the green room. So we got to get our value out of Mr. Loggins out there. So all of you who've been asking for it, been tweeting about it for weeks, angry that I would dare to have Loggins integrity. There you go. All right, to the land of the futures we go, listeners. Yeah, we're all in the danger zone. Whenever you see in the front part of the curve tick up over 10 handles, yeah, danger zone alert, listener. That's what we're seeing right now in the VIX futures surface. Obviously, backwards all day long. If we weren't, I would be even more concerned. Like, what the hell is going on? What am I missing out there? So yeah, we are super backward in the curve right now. In fact, if you look at April, looks like April is not quite 9, looks like about 8.5 points above where we are in the D's futures. So that's quite a lift from front to back over the curve. Of course, the cash north of everything out there right now. As we kicked off this segment, I should say, that April future in VIX, a little bit north of 31, about 31.50, and puts it up a little over 10, about 10 2/3 points on the week. May coming in right now, 27.5, a little bit north of that, so that's up a little over 7, about 7.3 points out there on the week. And then, of course, you go out through the middle of the curve. We settle out a little bit around the 25, 24 level through midsummer. And then by the time we get to December, like we said, 22 2/3 as we kicked off this segment. Mr. Rhoads, A, are you happy to have your buddy, Mr. Loggins? Unfortunately, we couldn't contact the Winehouse estate in time to get your requested songs. And then B, what's catching your eye out there on the vol surface as wild and backward as it is this week, sir?
Why don't you just get audio of Archer saying "Danger Zone"? I don't think you'd have to pay anybody for that either. And what was the other question? Sorry,
what's catching your eye on the vol?
I was talking to the chat, which I shouldn't do, but I did.
What's catching your eye on? Welcome to my world, by the way, sir.
Yeah, I know. Trying to multitask. I'm no good at it. Got a brain injury.
What is catching your eye on the vol surface this week, sir?
Oh, on the vol surface. Well, I mean, I was really surprised yesterday that the April contract was at as much of a discount as it was to end the day. I'm still a little bit perplexed by that one because we've only got, after today, we've got 7 trading days to go. So I would expect that to be a bit more narrow. Also, not necessarily our term structure, but our friends over in Europe. Just before our market opened yesterday, the April and May contracts were equal to each other, which again, it was like, okay, the European volatility folks think this is going to be a half a day event over in the U.S. and we're going to be done with it. And that didn't last particularly long. So the volatility surface was getting it wrong first thing yesterday. This 10-point discount that I see right now with April versus spot VIX, that just seems to be a bit extreme. But when it gets extreme like that, you got to keep in mind that the futures are based on where traders think VIX is going to be, and they're moving it up half as much as spot VIX today. So maybe we're closer to being in the clear than we were 24 hours ago. I mean, I guess we are just by definition because at some point we'll be in the clear. But maybe there's a little bit more certainty as to when this thing is gonna bottom out. I also think maybe I think down 20% would be a little above 4,900. I think that's going to be the next spot that holds if we break whatever level the Wall Street analysts are talking about. Personally, I think that 4,900 level is where we're going to be bottoming out. The second I see it, I'm going from short to neutral.
So you're saying F5100, 4,900 is?
I think 4,915. This is going to be really funny if that's like an intraday bottom. Make sure we recorded this.
We have recorded it. Everyone heard it. You heard it in the chat, listeners. You heard it in the chat. So Russell, 49.15. He's calling that maybe not a bottom, but at least maybe an inflection point, maybe a pause. And if we do turn around there, he'll be able to dine out for years like Elaine Garzarelli on the 87 crash. But I digress, listeners. Mr. Rock Lobster, same question for you, sir. What's catching your eye in a very backward vol surface this week?
Yes. Can you believe that? Well, backward to me always means the same thing. Short-term VIX is going higher and long-term VIX is going lower. So however you want to take that and, use that as a trade, I think you are more than welcome to do so. Right now, the April contract's 31.5, May contract's 27. And the trades I like here, butterflies, lovely trade setups, super wide, 20 points wide in VIX, setting up like the 25, 40, 55, or, some strikes like that where you basically are selling the VIX strike and letting the futures work their way up. So you got a situation like this and you don't really know what's going on. You buy some flies and you sit around and you have a very high volatility trade. Because they will move if the market just keeps going up and down, up and down, up and down. And we stay, at a higher VIX number above 30, which doesn't happen, normally it doesn't happen for an extended period of time, but heck, this is the single digit VIX precedent. So I think anything can happen, right? Maybe we stay at a 40 VIX for 2 weeks or 3 weeks. That will put some gray hairs into people for sure. But I think it probably doesn't happen that much, but I think the upside, those flies are easy because they're also very easy to hedge. They're cheap, right? They only cost you $1.50 or $2. And if vol does kind of revert around, then you can buy a bunch of VIX puts against them or something and try to rip the way down. But if we do stay in this sort of kind of painful, not painful, but in this, this backwardated curve, you could get some money out of them. So it is a trade in high vol, and you just have to remember that as time goes on, if we continue to have this relatively high realized vol, those futures slowly creep up to where VIX cash goes. So, and right now those futures are creeping up. So could it all change after this weekend? Who knows? But right now it's probably a good day to sell some of your long vol. I'm doing a little bit in a couple of my products. So I've got some contra sides which need to sort of get some air. They're not doing that great. But we'll see, but anyway, I think I like those as a trade idea right now.
I like a good VIX fly myself. I may have one or two on in a few wild products. You want to be selling something else against whatever you're buying in these wild markets out there. Things are just so crazy out there right now. By the way, speaking of Danger Zone, a lot of our chat reminded me, RIP to the Iceman. Yes, Val Kilmer did pass away out there. We can't be playing Top Gun and talking about Danger Zone without remembering the greatest, perhaps one of the greatest scenes in cinematic history, the volleyball scene of Top Gun. just legendary for all the wrong reasons, and yet are they the right reasons? Listen, but yes, thanks for reminding me of that. Val Kilmer passing away this week, listeners. Let's get out to the land of vol right now. Is it spicy? Is it hot? You know it is, listeners. 1.5 million contracts on the tape in VIX land right now. The ADV 1.12 down about 10,000. That's obviously going to move the other way. If you're wondering how is our proprietary TM VIX top 10 indicator stacking up right now. Is it all calls all the time? Pretty much, with the exception of one. Let's see if we can find Waldo this week, listeners. Cost you $2.15 to break into the top 10 in VIX land right now. That's getting kind of hot. That gets you to the June 42 halves. Spoiler alert, 42 halves popular again. Number 9, 217 is the April 42 halves. Then we break our way for those for a little bit. Number 8, 218 of the May 35s. Number 7, 220 of the April 25s. Number 6, 230 of the May 75s. I do believe that is part of that Super VIX Stupid. That reminds me, I forgot to ask the Flowmaster yesterday about his proprietary tracking algorithm for our VIX Super Stupid. If they kept that bad boy on, that was May. They are looking. They laugh at 50 cents is all I'm saying. Now, obviously, they have something else against it that could not be doing great. But on the option side that we could track easily, that side looking pretty good. I need to ask the Flowmaster. Remind me, listeners. Number 5, our first and only put in the top 10 this week. 232,000 of the April 18s. We were talking about those on the show last week, I believe it was. They were trading in big blocks for, I think it was 32, maybe 42 cents. Either way, that's a distant memory right now. You can get all of those you want for a little bit of nothing, let's just say. Number 4, 276 of the April 20s. Number 3, 280 of the April 22s. Number 2, 288,000 of the April 40s. And number 1, 428,000 of the August 42 half calls, listeners. And now it's that time, listeners. Maybe you've been looking forward to it. Maybe you've been dreading it, listeners. It is time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right, we'll give Mr. Loggins a break. It's in his contract. He gets to go back to the green room while Russell is talking so we can play Russell's music. Mr. Rhodes, sir, what's catching your eye out there this week?
Sure, this is purple M&Ms. That's what I hear. Maybe he's upset over the craft table. Monday with VIX at 2460, somebody came in and bought 500 of the VIX April 9th, 36 calls for 51 cents. Right now, they've got a 4-bagger. The last I checked, it's probably better now because I priced these about an hour ago. It's still open, and I saw a bet of 228 for those guys. So very nice trade. Bad trade. Somebody on Monday, VIX was up at 2461, and they decided that that's as high as VIX needed to get. They sold 4,150 of the April 9th next week, so they might be able to still survive this one. 24 calls for $1.92. They did buy the 26 calls for $1.57. That's a whopping 35-cent credit. I would, if I have to bet, if they hold this through expiration, I would pretty much bet that they're going to be out $1.65. And if they've traded out of it, they probably are trading out of it at a loss pretty close to that. Find an exit trade on it, but they're pretty big open interest on that option series, so it would have been difficult to dig out a 400 lot on that one. Wednesday, best trade. I mean, there's some great weekly trades here. I'm not sure why they used this expiration, but on Wednesday with VIX at 2139, maybe the April 23rd future was a little bit lower than the April 16th future. I don't know, but somebody bought 150 of the April 23rd 35 calls for 32 cents. They sold the 50 calls for 15 cents, and that's a cost of 17 cents. It appears that on Thursday, when we were getting our initial reaction, they exited the long part of this trade at between 70 cents and $1 and stayed short the 50 calls. It still appears that they're short those 50 calls. I like to do that with vertical spreads like this in VIX, where if you've got a bullish one that pays off, flip that sucker around if you think that your short strike's not going to get hit. Or leave the short strike on. Typically, I'll flip it around. I'll buy something farther out of the money. When I found the selling trade, I couldn't really find where maybe they bought a farther out of the money strike. And again, I've got to do a little bit more digging on why April 23rd instead of April 16th. And then on Thursday, there was a whole ton of love for the April 9th 30 calls, mostly buying. Not a whole ton of selling, and also came across a buyer of about 500 of the April 9th 40 calls. Looked like it was an opening transaction. They paid 40 cents for them, and it looks like there's some traded at $2 today. They were a $1.60 bid earlier, but they were like a $1.60 by $2.30. I mean, the bid-ask spread was just stupid. The issue that we have in some of the ETPs has worked its way into some of the VIX options as well, with the higher level of volatility resulting in definitely wider spreads. And that's really, I mean, there's a mixture of trades for today. Most of them look like using the April 29th. If they're trading weeklies today, it's the April 23rd, so the April 30th, and expecting some follow through, but nothing absolutely massive. And then finally, I something I forgot to comment on. We talk about volume an awful lot. There's no way for me to really quantify the weekly's volume, but I can tell you how many pages of weekly trades there are. There are a couple of days this week where there were 7 pages on Bloomberg of weekly trades. Normally, there's 1 or 1.5. So people are jumping on the weeklies based on what's going on, despite next week being, in 2 weeks being the standard expiration.
All right, listeners, let's see what we got going on out there this week in the big mothership VIX options out there, listeners. And I see a bunch of folks joining us here for our emergency live stream. If you want to join us later for the official after party of Vol Views and for the network known as Options Oddities, going to be another wild one over there. Then head on over to the Pro. That link's in the live chat right now. You can join us for Options Oddities. You get Pro Q&As. You get all kinds of awesome stuff, live streams throughout the week, like this and everything else that we do. And, of course, sweet, sweet giveaways. Congratulations to Douglas, the winner of our March Pro Trading Crate. You literally can't get that anywhere else, and each one is bespoke. And sometimes they go out the door, and I'm like, I'm kind of jealous. I'm like the Rock Lobster. I wanted that. But nope, it goes out to you folks. All right. Let's see what's going out there on the VIX volume front this week. Today, is it spicy? You know it is. 1.5 million contracts, listeners. The big dog today, you might be asking, what are they up to today? 97,000 of the April 22s. If that sounds familiar, listeners, it's because we were talking about these last week. Remember our poll on the show last week? We saw a huge block of the April 22s going up for 77 cents. And then, of course, at the same time, or right around the same time, we saw a huge block of the April 2030 call spread, also for 77 cents. And so we said, gun to your head, which one of those bad boys are you choosing? Our audience, 42.1% of you chose the April 2030 call spread. Spoiler alert, that one looking pretty good as well. 26.3% of you chose the April 22 calls for 77 cents. Those also looking really good. And then 21% said both of them spooked you, didn't want to touch them. But 97,000 going up to April 22s, I kind of wonder if maybe they're getting out of some of those. I'll have to take a glance, I should say, to look a little bit later out there, listeners. But obviously getting out of them for a better level than 22 cents, or excuse me, 77 cents out there. If I could, there's so much going up, I can't even find. Well, I'll get to those in a little bit. Tell you what, why don't I do this, listen? How about I go the easy way to find exactly what I'm looking for? All right, yeah, they're trading for prices between $8.85. They got up to $10.15 for 1,000 lot. So if they bought them for 77 cents, sold them at $10.15, I would say that's a good do. Looks like a lot of them were sales, so I'm going to go out on a limb and say maybe they are bailing on those bad boys, which again, hard to blame them if that's true. Number 2, 87,000 of the April 25s. Doesn't look like there's a lot of spread action on those, so it seems like they're their own beast. Number 3, 61,000 of the April 25 puts. Number 4, 59,000 of the April 30s. And number 5 today, 49,000 of the May 17 puts. That's a that's an interesting one. Let's just look really quickly. Listen, I know we got to get going, but let's just look really quickly. Trading for prices around between 15 to 20 cents. May 17 puts. Are you a buyer or a seller of those bad boys for 20 cents roughly? Might be a fun flash poll. Either way, that's number 5 today. Yesterday, a banger. Seems like we're going to get there today, though. 2.2 million contracts on the tape. The big dog yesterday, 125,000 of the April 20 puts, listeners. That surprised you that, hey, the big dog yesterday on a day when we were popping hard, but maybe not as hard as you might think. Maybe that's probably one of the reasons we saw this big print going up there was, of course, just a size going up on the downside in VIX. Again, you don't see that too often out there. If you're wondering the prices those went up for, they went up for a big block 30,000 for 39 cents. Looks like paper was opening on or not opening, but paper was buying on those at least. We don't, obviously there's OIs. We don't know if they're opening. And then also we saw 121,000 of the VIX 30s, the 30s out there, listeners. So just a interesting day out there across the board. Yesterday, number 3, 90,000 of the April 35s. Number 4, 86,000 of the April 20s. And number 5, 80,000 as well of the April 40s. By the way, yesterday, we did see a big print on that April 2030 vertical going up. Looks like paper bailing for around $3.40. So probably bailing on the 22s today for $10, somewhere in that ballpark, $8 to $10. Bailing on the call spread, you paid 77 cents. Bailing for $3.40 yesterday. Again, not the worst do out there, listeners, as the kids say. By the way, the SEP 80s traded 50,000 times yesterday for 40 cents. Oh, 81.50. Oh, there we go. Now we're getting to the fun. The 81.50 vertical, both opening, listeners, 50,000 times yesterday. If you're wondering, it looks like they paid 26 cents for that bad boy, for the SEP 81.50 vertical. That's a thing of beauty right there, listeners. 50. That's the kind of realm of the vol regime we're in. 81.50, listeners. Wednesday, 1.03 million. Let's roll through some of the rest of these. 107,000 on Wednesday. The April 17 puts, the big boy there. I looked it up. 9 cents, a lot of them traded, including a block of 25,000. Maybe somebody was getting the hell out of Dodge and saying, I'm not getting anything for these puts. I'm bailing on it. Or maybe they were thinking the vol fade was in. Wednesday night, that could have been the play. So, yeah, weird stuff. Tuesday, 597 on the tape. 31,000 of the May 25s was the big dog. And Monday, 764 on the tape, the big dog. 32,000 of the April 25s. I rushed through those because I want to get to some of these vol ETPs because these are just wild, listeners. SVIX, when we kicked off the show, 13.5. If you're wondering, we haven't seen that in a while. 13.25 now. It's down 7.25 points from where it was this time a week ago, listeners. We haven't seen SVIX fall out of bed that hard in a while. We had 41,000 contracts on the tape, probably going to blow through that already. The ADV is only 14,000. We're back, if you're wondering, we're back below the launch level of SVIX. It launched a little bit north of 14, I do believe. You got to go all the way back to March of 2023 to see SVIX at this level again, around the 13.5 and below level. So you got to go back a ways. If you're wondering what is the all-time low for SVIX since inception, it's a little bit shy of $10, around 9.75 down there. So we still got a ways to go to hit that. But yeah, we have fallen out of bed. Mr. Rock Lobster, you guys have been endeavoring to run a VIX, or I should say SVIX newsletter out there. What are your thoughts on this SVIX apocalypse, sir?
That's exactly what it is. It's an apocalypse. I think there is opportunity on it, but SVIX does not perform as well as other things when the market snaps back. I think you do better shorting. For the money for return, you'd probably do better shorting like UVXY and VXX and stuff like that. SVIX, and you know what? A lot of the really good returns in it come when VIX is in zone 1, like 12-13. Needs extended period of time for those futures just to melt and the thing to kind of kick up. So just for the future, but would I guess SVIX will be higher at some point this year than it is right now? I would say yes. But just, if you're, scoring at home, I think there will be an opportunity in it. If you could get some decent call spreads around the 14-15 level, like, 15-17s, 15-20s, stuff like that. There's not a lot of upside call market to create a spread. There's a couple of terms that have it, but yeah, it will be higher at some point. But in order to really make that SVIX shine, you need that yeah, it really likes the 12 handle in VIX. It really does, to kind of get that upper ramp. Other than that, it's kind of a, it's a trade into a vol pop, which we have right now. So that's my story on SVIX. Yes, but the SVIX newsletter has not done well. And maybe I might get back to even in December of 2027, I think, at this point.
So you're not rushing to scoop SVIX with both hands at this level, sir?
I did roll some puts down, so I was short some put spreads in it. So I rolled some down, so I kind of fake scooped it. So we'll see what happens. So I only trade the options with a controlled spread. That way, at least I just have a spread. I don't have like infinite sadness, just a credit sadness. So I like having the control of it, but as of right now, yeah, it could go higher. Does it go higher next week? I don't know. We'll see. You need the vol futures to go down, and you need the market to settle. And it's still, I'm not seeing a lot of settle as of right now. Although I thought for a second there we were going to press the circuit breaker, which would have been exciting. I would have launched I got to close a couple more upside call spreads in VIX, but no, we're going to hang at 40 like it's nothing. So, but yeah, I would say SVIX, it will be higher at some point this year. I'm fairly confident, but as of right now, I think it'll still be a little woolly. I think if you're just trying a new position, there could be some better things to do.
Yeah, interesting stuff. Mr. Rhoads, same question for you. I know you watch a lot of inverse vol. You were actually joking earlier. You like this V yield, this new edition better. Was at a 2290 when we kicked off the show, down 2 1/3 points. We were knocking it for not really doing much on the show last couple of weeks, but now all of a sudden, if you own it, you're happy about that, Mr. Rhoads. What are your thoughts on what we're seeing in SVIX and V yield, sir?
The VIX ETPs, people forget they exist, that focus on the longer end of the curve. And that's because they're boring. V yield, I think, is boring, and it's concentrating on the short end of the short end. So that's why we probably won't give it a whole lot of love. It underperforms when we're moving. It's like a low beta stock. It underperforms on the way up, and it outperforms on the way down, which would be opposite of what VIX is doing. SVIX, we haven't. Did anybody take a look at what calls they own?
I was going to ask you that today. I didn't get a chance to look.
I hate to do that like mid. Yeah, they're on the May 25 calls.
Oh.
And they own the May 30. Oh, you know what? They own the May 35 calls and the May 47 and some May 47 and a half calls.
They bought the stupid. It was them.
They rolled from the 35s to the 47 and a halves, which I thought was an individual trade and wrote up yesterday. So I don't know if the options have been helping them or not. We're gonna have to do a little bit of digging, but I kind of forgot that they own calls, and that was supposed to help a bit on in situations like this. It'd be kind of interesting to see how much this helped relative to what SVIX would have done without owning those calls in the portfolio.
Yeah, I was hoping you would have that data because I didn't have a chance to look before the show, but you're right. That is interesting. They bought the super stupid in VIX. It was them. It was SVIX the whole time. I
don't know if it was them. I don't know if all of it was them. They had some April calls. They had some May calls. They've just been rolling them up.
They have been rolling. That does help in times like this, listeners. Let's get out there really quickly. Some other products we can talk about. UVIX out there, listeners. Just another wild one. 68.80 up 32 points from where it was this time last week. I mean, we got some ridiculous levels here in UVIX back in let's say, a few years ago. So it's kind of hard to compare and contrast. But if you want to go back to August 5th of last year, UVIX spiked to about 192. So we're not quite there, listeners. Maybe that because that was more of an exogenous kind of shock. We were kind of braced for this one. Maybe not as bad as it's playing out, but we were braced for a gut punch. Still 68.80, up 32 points from where it was this time last week. UVIX, let's see, putting up some numbers out there right now. Let's see how much paper on the tape. 29,000 may not sound like a lot, but the ADV is only 16,000, excuse me. So that's decent. UVXY 37.80, up nearly 15 handles, 14.8 handles from last week. 211,000 contracts on the tape. And let's go out to VXX. Was at a 71 when we kicked off, the show, up 20 points from this time last week. And we're already kind of coming up against it, listeners. Let's get out now into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, spoiler alert, none of us had a 40 handle in the crystal ball here for VIX. By the way, at the end of the show, the sell-off has mitigated a little bit. We're only off about 4.4% in the S&P, 4 1/3 in the NASDAQ, and a little bit shy of 4 in the Dow. 40 1/3 looks like in VIX, and let's get the exact print, not that it really matters. Because no one had a 40 handle, so there are no winners this week. 40.44. Mr. Rock Lobster, you can go first, sir. What are your thoughts? Outlook for next week? I won't even be crazy. I won't make you predict the VIX unless you really want to, because it's so wild. But you can if you want. And then B, what do you expect?
I'd say we'll be back to 20 by next week.
20
I'm gonna say
even. Wow.
20. What year is it? 2025. That will be my VIX number.
Wow. Okay. Getting out there. Rock Lobster 2025. Any other things you want to share for your outlook for next week or over the weekend? Things to keep an eye out for? And then B,
keep an eye out for any possible tariff news, anything like that. Could be quite interesting. So, if the news is a little better, I don't know. Apparently this is going to the plan as far as I could tell, but part of that plan is having the market just not be happy. So, I guess you got to buckle up. There you go. Oh, and optionpit.com, because I got to go.
I will say, by the way, your compatriot over there in the pit, he had a 55-55 this week. So he was the closest.
Yeah.
In his palindromic nonsense for Mr. Mark. Check him out over there, listeners. If you want more, man, an hour flies by when you're talking vol fun. Check him out over there in the land of the pit. Yeah, by the way, if you're wondering, I was at a 22.72. Russell was at a 20.47. No joy for us this week. Mr. Rhoads, actually, I was technically closer, so I guess I can go next if I'm feeling. I'll tell you what, we'll do it. We'll play the game because we played it every week regardless. 2008, we played it. We play it again now. We play it again in 2020. We play the game, listeners. It's what we do. It is time to play the game. And, I think we'll come down. I'm sure it will come down as stark as the Rock Lobster is saying. I'm going to say 28-27 for this time next week. And Mr. Rhoads, if you have any thoughts you want to share with folks as we're rolling out of here, any things to keep an eye on, your thoughts on vol over the weekend. Are you doing your weekend UVIX trade? I forgot to ask you about that. And then B, what is your predictions?
Yeah. Weekend UVIX trade. I don't think it's a particularly good idea to do now. And I do it systematically every weekend since I came out with it last summer. My guess, I'm going with 24.47. I think VIX is going to be hovering around the mid-20s. It's going to take a little while for us to revert to the mean. Sometimes it happens very quickly, but it does take a little bit longer when we have these two-step moves up to the upside. It was very possible that, we come in Monday morning and some of the I do believe that the worst of the tariff news is not in front of us, it's behind us. Because I feel like this is like a big public negotiation where he's throwing these numbers out and then we're going to negotiate with each individual country, and you're going to start to see agreements that hopefully everybody can kind of live with. And as that happens, I think volatility and uncertainty will start to come down. I just don't know how quickly that's going to happen. But just to circle back, my guess was 24.47 for next week.
24.47. And since we got a lot of people listening to us live right now, if you have any other thoughts you want to share, any things we didn't get a chance to touch on, any products or anything to keep an eye out for, I have at it, so I'll give you a couple extra minutes.
So the way I'm looking at the markets right now, and I'm always putting myself out on the limb there, I actually think we're going to move higher into the close. I feel like it's starting to feel like we're catching some bids here. And, VIX hasn't made a new high since early this morning, even though the S&P 500's made some lows, and that's usually a pretty good indication that some of the panic is starting to come out of the markets. If this were a Wednesday or a Thursday and not a Friday going into the weekend, I'd be a lot more certain about that. But that's how the market's feeling to me right now. I actually do think that we finish higher on the S&P 500 and lower on VIX than where we are right now.
That's certainly interesting. We are, again, continuing to lift a little bit as we're coming into the final post minutes of the show here, listeners. Off about 4.2% in the S&P, and NASDAQ off 4.05, was off over 5, so both of them. So maybe we are bouncing here. Maybe this is just kind of the old dead cat bounce. I see our chats all over the place. 25, 78, 33, 13, 36, 30, 30. That's what I love about these markets. It makes for some fun vol prognosticating. Listen, I hope you had some fun joining us this week. If you are new in the live, you want to check out what we have cooking over there on the Pro, theoptionsinsider.com/pro. I'll be back at 2 p.m. Central, the hold court on all things unusual activity with a wee bit of options oddities. By the way, all of you who were listening last week, Nick's offer is still live there, so if you want to get that free access to that platform, he's testing out before it goes out to the world, and it's pretty cool stuff. I was messing with it during the show last week. Then make sure you reach out to Jean over there on the producer side and tell her that, because Nick wants to reach out to you personally and then talk about the platform. So he's that excited about it. So you are very much in the early echelon. That is only for our Pro members. So check it out over there on the Pro. And of course, you should be listening to the full podcast network if you're not listeners. Check it out, including, of course, all of our shows out there throughout the week. You want to get the full network feed at the end of the day. That is going to do it for us right now on the on-demand side. Thank you for joining us here on Vol Views. Make sure you keep your powder dry throughout the week. I'll see our Pro folks back in a little bit for oddities. Back again on Monday for the option block. Who knows what's going to pop off over the weekend. Definitely a time to maybe keep a little powder dry in case we have some literal weekend risk in one way or the other. Maybe we have tariff detente. Maybe we have more tariff escalation. Either way, some literal weekend risk perhaps in the offing. So be prepared for that. And then back again all the way throughout the week with our usual array of content till we're back again on Friday for another episode of Volatility Views. Stay safe out there.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.